Welcome to Dr. David Eifrig's Health and Wealth Bulletin. This is Weekly Update. With me this week is John Gillin from Stansberry NewsWire, and he's here to talk to us today about the recent market volatility and what's going on with the coming possible trade war. John?
Well, we have certainly had a lot of volatility, Amanda. Opening down 550 yesterday and rallying about 800. So expect volatility going forward. And our biggest concerns now are a possible trade war, which becomes on again, off again. It's a lot of showmanship, but I think there will be action taken, and that's going to change the math a bit on how you invest going forward.
Okay, so given all of this recent volatility we've seen, what does that mean for the market? Should we worry about a coming downturn?
Well, let's keep things in perspective for the market. And I just want to look at a couple of notes because fundamentals are so important, and they're so good at this point with earnings growth. We've got reasonable valuation, about 21 times 12-month trailing, 18 times earnings now. We've got dividend increases, buybacks, M&A is picked up, repatriation of cash. All of this very important for fundamentals. However, because we've been in investing nirvana, there's something called the tipping point, which you've read the Malcolm Glazer books. And when we take away quantitative easing, when the Fed funds are moving higher, and I do think rates are going up, that's going to change the math. Inflation is supposed to kick in at some point in the cycle. That's going to happen. And then the present value of future cash flows changes. So that's why we've seen so much volatility, in particularly the high-flying tech names. Passive investing has chased into these names and put them to valuations we haven't seen, I'd say, since back in 2000. So again, why algos kick in quickly and they become, they take stocks to levels that they are going to trade, buy or sell. The fundamentals kind of fall away quickly.
Okay. Now, given this kind of environment, what sort of things should we look for in order to invest to sort of hedge ourselves against anything that might happen?
And hedging is incredibly important, because if we were to dismiss the volatility that's taking place, hey, it's an all clear sign, that would be silly. So there's always gold. Mm-hmm. Gold's not going to pay you a dividend, but gold is around the $1,300 level is going to let you sleep at night. Silver's done nothing in 5 years. You could buy the Silver Wheaton stock, SLW, which if we are to get things very frothy, silver will trade higher, in my humble opinion. I want you to stay away from volatility, the VIX. I want you to stay away from Bitcoin, that we can't quite put our fingers on where that is heading. Other things, AT&T pays you 5.5% dividend. Verizon pays you a 5% dividend. I like self-storage REITs, apartment REITs. Look like they pay over 4%. So those are some places where you can rest easy. You could hide, if you will. Don't sell your long-term investments, but if you're looking for places just to park for a while.
Right, some sleep well at night investments.
Some sleep well at night investments, exactly.
Great. All right, well, thanks for painting a much happier picture for us with all of this market volatility. You can catch John Gillin again on the Investor Market Cast as part of the NewsWire service. We're going to have a link to that in the description below. That's it for today. Don't forget to like, share, and subscribe, and we'll see you next week.
Great, Amanda. Thanks.
Great. Thank you.